Guest host for the next hour, we have Mario Singh, Director and Training at Education at fxprimus.com. Mario, good to have you with us. At a time when China says, is questioning whether Europe can contain its debt crisis, should the rest of the world be worried?
Well, I think China is really blowing hot and cold right now. Literally just 24 hours before that statement came out, they literally went on air and they said they're throwing their weight behind Europe's debt. In fact, when Greece comes back to buy bonds, they're going to be saying they're going to be buying Greece bonds. So they're putting their weight behind all the European countries. My take is that they're just in a position where it's a knee-jerk reaction. Sure. They got played out by the US, and when they throw their weight behind Europe, they want Europe to really stand firm with them.
Okay, so they're putting their money where their mouth is at this point in time, and that is to back Europe. What are the implications for China if Europe doesn't pull through?
Well, that's really a big question mark right there. At this point, China is really putting its weight behind Europe. They are already assuming that the US will not pull through, which is the reason why they're decreasing their holdings of US debt. So coming out now, China really wants the Europe to pull through, which is why they are full force behind the whole EU, basically.
China has come out to protect its investments. It's repeatedly expressed, of course, support for the single currency, talking about the euro. You think China's saying that it backs Europe and the currency? Do you think this has kind of put the floor on the euro, the single currency, as far as you're concerned?
Great question, Chris. And now the key thing is just today, immediately when those questions came up, we saw how euro-dollar popped up literally about 75 pips on the foreign exchange market, just based on one statement. Now that tells us that all traders and investors are really looking at that. Will that be a floor permanently? Not so sure, but at least leading up to the end of the year, it will be a mini support providing for the euro-dollar.
Okay, Louisa has a question.
Yeah, well, we've come back through the 200-day moving average, so there are some that think that's a good thing for the euro. But what's your call on the euro-dollar then? What's your target?
Well, here's my target, at least leading up to the end of the year into the first week of January. This happens literally every year. So the key thing is for traders, even for myself, I'm not even taking any position on the euro-dollar, at least in the short term. What happens towards the end of every year, there's always going to be thin trading volume, and that can only mean two things. The euro-dollar will be stuck in a very tight range, or it's going to be a major breakout either at the top or the bottom. What that means is going to be a lot of uncertainty in the euro-dollar for the short term, so I'm taking a break at least until after Christmas to the start of 2011.
Mario, good to see you, by the way, as well. Good morning. Do you think that the two-speed recovery, is that going to continue? Two-speed, not in Europe only, but also Asia versus Europe?
Yes, I absolutely agree with that. We will see that recovery soon. The key thing is always, see, when the US sneezes, the world catches a cold. So everything is literally still banked right up on the US. What exactly will the Fed be doing? What exactly will Bernanke be doing coming up to 2011? My take is they will not be increasing interest rates anytime soon because they just still have to deal with a high unemployment rate. So everything all said and done, we still have to take cue from what the US will be happening, and then we move to how Asia will reap the repercussions.
Yeah, and Mario, that's such a fascinating point because, of course, yields are rising, which is the unintended consequence of Mr. Ben Bernanke, as you know. But there's even some discussion that not only could we finish out this QE2 to its fullest, but we could also engage in another round of quantitative easing. QE3, is that on the horizon, in your opinion?
I absolutely wouldn't rule that out. They had their first round of QE from 2008 leading up to March 2010. When they injected a huge amount of $1.7 trillion. We saw second QE2 at $600 billion, and now Ben Bernanke goes on air to say QE3 is absolutely possible. Now, the main thing for us to really explore is this. What is the main purpose of QE? It is to literally depress and keep borrowing costs at a low so as to stimulate economic activity. That, my friends, is essentially not happening. So whatever Ben Bernanke is doing now is the exact opposite of what he intends to happen.
But if QE3 does happen for the US, will that throw the spotlight, shift the spotlight from European debt to US debt?
Right now, there are two major spotlights. It won't just flicker one on and off. There's going to be two major spotlights on the US and Europe. Whenever one QE3 comes out, the spotlight just goes bigger, but it will not put out the fire on where sovereign debt is concerned for Europe.
All right, Mario, put your thoughts right there. Stay put. We're going to talk to you in just a little bit. Mario Singh, our guest host for the entire hour.